Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. As I speak to all of you all this Monday morning at around about quarter past 11:15. Markets are holding out in the green marginally, of course, compared to what we've seen choppiness and volatility last week. To give you the levels on the Sensex Nifty, Bank Nifty, rupee dollar, and Brent, that is crude oil. Well, Sensex is up about 80 odd points. 65,800 is the level on the Sensex. Nifty is up 25 points, 19,540. Bank Nifty is the one which is down marginally about 85 points. 44,790 is the level on Bank Nifty or Nifty Bank. Rupee dollar, well, a little bit of strength of close to about 11 paise, 0.11 paise on the rupee dollar equation, and the level is 82.72. Of course, we did lose quite a bit of ground on the rupee against the dollar last week, and remains to be seen whether we find a little bit of strength coming back into the rupee. Scale could be anywhere between 82.50, 82.55 on the strength, 82.75, 82.85 towards the weakness on the rupee dollar equation. On the crude oil front, well, Brent, though today there is a marginal downtick, but last week did see elevated levels. Level on the Brent is about $86.21 to a barrel. Still high. Could see a little bit of cool off given the elevated levels over the last possibly about week or fortnight on the crude oil front on fallback of various data points globally, more so, and of course the commentaries coming through. So expect a little bit of strength in the rupee coming back against the dollar, and on the Brent, expect some downtick as far as the international commodity prices are concerned. On the markets, well, we have seen the earnings season for the first quarter, and we are virtually at the fag end of it. Possibly in the next couple of days, we will see curtains down for the first quarter earnings. And to sum it up, there has been some dark spots, but not as large as any kind of concern. Expectation and the commentary from the management across different sectors has been quite strong, and there has been scope of improvement as we go forward on the couple of other earnings for this financial year, especially the second and the third quarter. So expect a little bit of improvement over there. Credit policy possibly could throw in a little bit of more strength in the rupee, subject to provided what the commentary has to tell us from the Governor Das, and of course what the recommendation is from the MPC as far as the interest rates are concerned. Most likely there could be a little bit of pause once again, but remains to be seen how it unfolds as and when we go towards it. I think somewhere around 10th of August is the date where it will see the credit policy unfold. Coming back to the markets, well, last week, like I was mentioning, we saw lower levels somewhere close to about 19,300. And if you put it in terms of points, it might look large as we spoke last week. But in terms of percentage, I think it was anywhere between 3.5% correction from the top of 19,991.85, somewhere close to about sub 19,300. And we did see the recovery also come through. Friday, we saw a little bit of stability coming in. This morning, again, the market is trying to hold its head up above the water. Remains to be seen how it unfolds. But there could be, and we did mention last week that market is in a consolidation zone. You would see choppiness and volatility. Expect some amount of overhead supply come through as and when the markets recover, purely because of the leverage positions that maybe in the market would want to possibly bail themselves out. And this correction was also necessary so that all the weak hands in the market go out and we have some sanity coming back into the market. So we for this week also we expect choppiness and volatility to be there, but not like what we saw last week. Where there could be downside, but that downside could be limited, and possibly closer to 19,400, 19,350 on the lower side on the Nifty spot. You could see some buying coming in terms of long-term investment ideas. So that's the view on the market. As always, recommendations we give out, two of them this time once again, more so from the uh, broader markets, and of course, large caps as well. The first one is from the mid cap cement sector, Dalmia Bharat Cement. This company came out with the numbers and the stock corrected on fallback of certain concerns and the numbers coming down. So we believe this correction is a great opportunity to add a Dalmia Bharat cement to your portfolio. From a longer time horizon, we expect the management commentary to play out well in terms of recovery in the second, third, and fourth quarter, and thereby you will see the share price also recover. So the first investment idea is Dalmia Bharat. The second one is, of course, from the life insurance sector. We've seen the numbers for the new insurance premium really coming out quite well, as per expectation in some cases, or better than that. And there is likely possibility that this run rate of new premium income should also improve going forward from here on. So ICICI Prudential Life is the second investment idea. Uh, Needless to say, these are fundamental long-term investment ideas. So please bear in mind, friends, that you should have longest time horizon, 1.5 year plus, more longer the better, to make out a sensible return from your investments. Don't rush into it. Start allocating small portions at current levels, and as you get correction, you can go on adding to both these stocks. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye bye.